Well, hello there, folks. It's the Crypto Lunatic, and today I've had a request for a video. I've talked about market makers in crypto, and I've been asked to explain that a little bit. So today, here you go. Here's my understanding of crypto market makers, who they are, what they are, and some of the sneaky little tricks that they do to manipulate price in the market and why they might do that. So this is a very rudimentary guide to crypto market making and the factors that you can look at. Now, with crypto, because everything's on chain, you can check out a lot of this live and see what's available, including buy and sell orders and who they are. Who are these mysterious folks? Well, it could be anybody. It could be anybody. Anyone with money and a vested interest in crypto can be a market maker. So, my friends, let's go through what is a market maker. So, market makers, in not just in crypto, but in the stock markets as well, they continuously place buy and sell orders, and this creates liquidity in the market. So they profit from the spread between the difference of the buy prices and the sell prices. And they can be individual traders, firms, or sophisticated algorithms designed for automated trading. And with AI in the space, this is going to be more and more prominent as we move forward. So market makers are important because they provide liquidity, and this is ensuring that traders can enter and sell their exit or they can enter and sell their positions quickly without significant price slippage. So they're providing liquidity there. It reduces volatility. So by placing consistent orders, they stabilize the market and efficient price discovery. They help determine the true value of assets through constant trading activity. So now, how can market makers manipulate the market? So there's a few sneaky tips and tricks that you need to know about here, folks. So one of the ways is spoofing. So this is where market makers they place large buy or sell orders that they've got no intention of executing, and they create false demand or supply pressure. Now, the effects of this is that it tricks traders into thinking the market is moving in a certain direction, prompting emotional trades and people that don't know what they're doing to go in all in. And once the market moves, the manipulator cancels the fake orders and reverses the market. So that's one of the things that these sneaky people can do, folks. They can do it. Then you've got wash trading, and this is creating fake trading volume by buying and selling the same asset simultaneously. Now, the effect is that this inflates the perceived demand, making the coin seem more popular than it actually is. Then there's the pump and dump. This is very common in crypto now, and you only need to go on crypto Twitter or YouTube and see some of these influencers, how they do it. They're geniuses. So what this is when a group of people coordinate to artificially inflate a coin's price. It's a pump. And the reason that they do this is because when people see, when especially retail traders, when they see the price start to fly up, they ape in and they start throwing money at it. And that creates the pump. And then when the market reaches a certain level, and it usually happens quickly, usually happens within about an hour or sometimes even a few minutes, it pumps up and then they dump it. People with a large amount of that coin can dump it, and that will crash the price in the other direction. So they make a load of money, and everybody else that's aped in or their followers that's been happening on YouTube, people with lots of followers, they get them to ape in. Once they've pumped the price, they dump on their followers. Very unethical practice, and only a matter of time before organizations like the Financial Conduct Authority or the SEC in America start clamping down on this. So it's unethical trading, it's coordinated trading as well. So it's often the retail investors that get rinsed when this shit starts happening. The next thing is stop loss hunting. So what this is manipulating prices to hit known stop loss levels, forcing liquidations and triggering automated sales. So after causing a slight a sharp price drop, manipulators then buy back at the low prices. So with crypto, you can see the orders, the longs and the shorts that people have got in when they've got leverage involved. Now they know exactly at what level certain trades will get liquidated. And what they sometimes do is force the price up or down to liquidate certain trades, and then the price resumes and shoots back up. So you'll see sharp spikes in the market, either up or down, to liquidate certain trades. And it's a sneaky move that market makers can do to liquidate people that have got big trades in. Then you've got spread manipulation, and that is the widening the bid ask and or spread to make it the trading less attractive for smaller investors. And what this does is limit the competition and keeps the market maker in control. So that's another one of their little tiny tricks that they throw in to manipulate markets. And then they've got layering, which is the placing of multiple fake orders at a various price to create a false sense of market depth. And what this does is manipulates traders into believing that there's significant support or resistance. So they're giving false readings for little old you and me who think we've nailed reading the market when it's actually false data that they've placed there. So there's a few of their sneaky hints and tricks that they use, and that their motivation is to make profit. So by manipulating the short-term prices, they can generate significant profits. They control over thin markets. So where there's low liquidity environments, manipulation's easier because it's more profitable. So checking the liquidity of the coins you're trading is one of the top tips when you're going into crypto. And this is something that most new people to the environment don't understand. Sometimes there's no liquidity or very low liquidity in certain coins, and it's a great indicator that they're absolutely primed for manipulation and extremely high risk. And then obviously for influence on token projects, some projects hire market makers to make their token appear more valuable than it actually is. And that's also done with crypto influencers. They're used in exactly the same way. That it's a very big tactic now for companies to approach Twitter influencers or YouTube influencers with big followings to get them to wax lyrical about certain coins, only to dump them on you to create a pump. So they're using people for very unethical means. So, my friends, hopefully that's given you a rudimentary awakening as to market makers, who they are, what they do, and some of the tricks of the trade. And we've all been caught, folks. We've all been caught. Anyone in the market for any sort of length of time has been caught. I certainly have. I've been rinsed. I've been burned enough times to know that this shit happens, folks. So just be aware of it. Nothing's safe. This definitely isn't financial advice. This is just advice on how you might get burned, So go in with your eyes open, know that not everybody's acting ethically, and know that market makers are definitely not there to help you make money. Then they're going to be claiming the house always wins. And when I call the house always wins, this is what I'm talking about, folks. So hopefully that's clarified it. By all means, look into it more and leave your comments if you've got any. If you know any other methods that they rinse the market, or if any other tips or tricks, you can learn from each other in the comments, folks. But that hopefully has given you an introductory level as to market manipulation, market makers, their role in the market, and how they can they can make things look too good to be true, possibly because that's just how they make their money, folks. So be aware of it. And if you'd like more of my little updates, by all means, please show the channel a bit of love, like and subscribe. And if you want another one of my little videos, you can find it just there.